Hey, it's Marko here from Fair Realty at Victoria, BC. As expected, the Bank of Canada reduced the overnight lending rate this morning by another quarter point down to 3% for the overnight lending rate. This was the sixth cut in a row. In social media, I'm seeing a lot of people in the real estate industry, including realtors, cheering on this cut. I think a lot of people are optimistic that this is going to help improve real estate sales. It's going to stabilize prices. Or maybe even cause upward price pressure. I think at best that this stabilizes things a bit heading into the spring market, specifically here in Victoria. There's a lot of uncertainty coming up, and I don't want to go through all the things like potential tariffs, BC government hiring freeze. This is simply going to buffer all of those headwinds that are potentially coming up for the economy and the real estate market. I was more so worried if the Bank of Canada had held rates this morning. I think we would have been in for a really tough spring, but this simply might balance things out, might stabilize things. Sales are a bit better so far than they were last year, but they're still very slow compared to historical averages. And inventory is going to start building. At the end of January, we'll have the stats out in about 5 days. We're going to have the highest inventory we've had end of January in the last 9 years. And that inventory is only going to continue building through springtime. So by no means do I think this rate cut is going to cause the Victoria real estate market to suddenly become robust overnight. You also have to look at actually what does this rate cut mean? The 3-year and the 5-year fixed mortgages, they're not going down as a result of this overnight cut by the Bank of Canada. Those are based on the bond market, the 3-year and 5-year bond markets. They haven't really moved that much recently. So 5-year fixed money is still around 4.5% plus or minus. Of course, there's niche products out there on insured mortgages, etc., as low as 3.99. But most people are looking at the mid fours. And this rate cut moves variable mortgages from slightly above 4.5 to a bit below 4.5. So it's not like this rate cut has caused interest rates to come down to 2% and everyone, including investors, is going to be piling in. For the most part, interest rates are still going to be 4 to 4.5%, which is not cheap when you're looking at huge numbers. This isn't 15 years ago. 15 years ago, when I had clients buying properties with 4% mortgages, they were buying properties with a suite for $500,000. Well, now that same property is $1.3 million at a mortgage of 4.5%. So that is a bit of context and reality behind all of this. Also, the Fed in the US is not lowering rates in sync. So who knows how much further the Bank of Canada can drop interest rates. I'm predicting potentially another full percentage point towards the end of the year, but who knows? They might stop at 3% and we might not get any cuts for the rest of the year. No one simply knows with all the uncertainty coming up. So I would not be immediately equating this rate cut to there's going to be a boost in sales, upward price pressure. I think for the most part, it's going to stabilize things until the March meeting, and we have a lot of things to digest before that March meeting in terms of the economy, tariffs, etc. And that next meeting is once again going to be yet another crucial one to see what the Bank of Canada does at that time and to also see what the economy is looking like heading into spring. That's it for this week. Marko, Juras, Fair Realty.